markets. But is there fundamental trigger? Are the tailwinds in place? And does IT have further headroom? We have with us Ankur Rudra, head APAC Telecom and India TMT Research at JP Morgan, joining in on the show right now to talk about exactly that. Ankur, hi, good morning. Good to have you on the show. And apologies for that delay in coming to you. And thanks for patiently waiting by. But just wanted to understand, Ankur, how is it that you're reading the macro setup for Indian IT as a sector when a lot of question marks are being raised about whether Indian IT services can catch up with the AI boom or not, and whether services providers will actually manage to sort of beat the product manufacturers dominant in the US?
Hi, good morning, and thank you for having me on the show. So I think on the AI side of the equation, it's sort of useful to take a step back and remember that tech services companies effectively tend to implement a lot of the new technology that comes by. At the moment, it's AI. Before this was cloud. So to implement AI at an enterprise level, you will need most large enterprises will need AI, IT services companies to help them with doing that, to integrate IT and AI into their processes. So I think there will be a role for them. We just feel at the moment, it's very early for enterprise AI adoption to take hold of. I think what most enterprises are realizing that to complete the AI journey, they have to complete the cloud journey, and that has not yet been completed. Cloud journeys got a boost during COVID. I think they were sort of left incomplete, and we're probably seeing the early signs of that. The nature of work at the moment is still completing that to be able to enable a lot more AI adoption overall. So I think IT services companies will definitely have a play on this side of the fence too.
Morning, and wanted to also understand your outlook then in terms of the US presidential election impact. What do you think, Trump winning the US elections could potentially mean for the sector in terms of the tax cut benefits as well and overall sentiment?
No, absolutely. I think the U.S. presidential election always has an important role to play. At the beginning, typically when this election is on the horizon, we sometimes see a slowdown in decision making. So, irrespective of the results, a decision in itself is helpful to act as a clearing event because decision making can restart, and that is I think something that can help the sector. From a specific policy perspective, I think there are two or three things to consider. You highlighted tax cuts. I think that's something that can be a positive, especially if the sunsets of the previous tax cut under the Jobs and Tax Cut Acts can be extended, or can be if the tax cuts can become deeper. I think that can be helpful for the sector, especially because last time we did see enterprise spend pick up as a result of that. But the other angle to that is also if there is, for example, any kind of tariff action, either unilaterally across the world or specifically against services, can be somewhat negative. It can also be inflationary. So one of the negatives potentially is that if you have an inflationary policy outcome, interest rate cuts which were going on might take a pause, and that can be negative for some of the financial services players in the US and hence tech spending by them. The third part, of course, is immigration. Historically, we have seen immigration being a bit more aggressive during the previous Trump administration, and that's something to consider. I think this time maybe the IT services companies are slightly better prepared because there is a lot more localization versus before. So the key potential positives are if there are tax cuts, also if there's any kind of deregulation in the financial services industry or the TMT industry, which can be helpful from a tech spending perspective, whereas the negatives are anything around tariffs, anything around immigration.
Right. The other thing I also wanted to understand a little bit in a greater detail, Ankur, is whether or not you foresee any visa restrictions and whether that's going to have a significant impact then on Indian IT, especially with dominant US presence.
Yes, I think like what we saw during the previous Trump administration, visa or access to work visas. As you know, the industry uses a lot of non-immigrant visas like the H1B visas or the L1 visas. And I think at the outset, the dependence on visas has reduced. About 8 years ago, the industry was a bit more dependent on visas, but I think a lot more companies now are better prepared. they are generally have a higher proportion of locals or green card holders, and visa dependence is a lot lower, and hence the potential risk of change in access to visas is a lesser of a risk. Having said that, there are two or three main ways immigration reform or any kind of access to visas can be impacted, either in terms of policy making or rule making or legislative. We have not seen legislative action, which is potentially the most negative one. We've only seen policy making action, so that might make it tougher to get visas. But like I said, industry is better prepared. This could be something that we'll be watching very closely.
The other thing that I also wanted to understand, Ankur, was what is it that you're sensing already in terms of hiring or attrition trends right now within Indian IT? Because one would assume that Trump perhaps would imply a stronger economy, and that would entail perhaps higher IT spends as well. Is it really that simple, and would that reflect or already is in hiring trends?
Well, I think it's an important point. I think what we have seen is, to start with, on the demand side, there are early signs of technology spend recovery, at least in sectors such as financial services. So from the financial services side, for example, we did see over the course of the last 3 quarters, companies report better numbers. We've also seen technology enterprise spending by the biggest US GSIBs, as an example, begin to pick up. So I think that's a positive sign. We are seeing and hearing of early signs of tech spending within the high tech sector improving, some hopes of tech spending in the retail sector improving, in addition to relatively healthy levels of spending in the travel sector and some of the consumer sector. So there are early signs that things might improve, and this might pick up a bit more. Now, in terms of if the US economy, which is still one of the strongest large economies in the world, continues to do well, and if there's US exceptionalism in terms of earnings growth, it's always positive for IT services outsourcers, given they have a high exposure to that. At the moment, technology spending has been held back despite a strong US economy over the last 2 years, because there was overspending in the past. So the main hope is that we've been through that cycle. We've already had 2.5 years of digesting COVID-led overspending, especially in the financial services and the high-tech sector. And if that sort of comes back, we will see much stronger, technology spend pick up from here on.
Okay, fair enough. And I just wanted to dig a little bit deeper, talking about the outlook in terms of earnings. You have flagged off a number of factors, but what do you think would be some of the challenges when it comes to the earnings trends?
Sure. So I think we are going into the second half of the year. Typically, second half there is an element of slowdown. Seasonally, we have furloughs, for example, in this quarter. A number of companies have flagged off furloughs. Hopefully, it will be in line with previous years as opposed to higher than expected. I think that's one area of softness. The second area of softness is also you tend to have potentially slower decision making just in before an election result comes out. So the deal signings could be a bit softer. We've seen an element of softer deal signings the previous quarter. There's a small risk that continues to an extent for the industry. And thirdly, I think we haven't really seen every industry pick up yet. So on a broad-based basis, we don't have the visibility that industry growth necessarily goes to double digits yet. And hence, as we go towards the end of fiscal 25, we may not have the momentum we need for fiscal 26 to be a double-digit growth year. So what we are seeing is a lot more of specific sectors which are doing well. We are seeing, sub-segments like, financial services, maybe parts of high tech doing well. We're seeing some of the mid caps doing well, but a broad-based recovery is still somewhat elusive. And if there's any kind of macro impact, that's the main sort of headwind to watch out for.
Right. So what's the verdict then post the earnings? What's the pecking order within IT looking like? Who's going to win the race and who's going to fall behind?
So as you know, we can't talk about specific
Sure.
names, but from a subsector perspective, I think what really stands out quite clearly is the mid-cap companies are doing a lot better. So we have seen a stronger, while there have been beats across the board, there have been some beats across larger firms too. But the growth momentum pickup in the mid caps has been stronger. We definitely hear them sound a lot more confident about the medium to longer term in terms of growth picking up. And some of this is partly because mid caps have higher concentration of revenues, either in terms of financial services or parts of high tech. So what we are seeing and hearing is some of the mid caps are growing a lot better. Parts of the ER&D industry has seen an element of slowdown, even though they are growing on an average faster than larger firms. We are also seeing the US financial services focused mid caps are really standing out in terms of the incremental growth momentum. So I would say those are the 3 or 4 main trends we see.
All right, good chatting with you. Thank you so much for giving us an in-depth perspective as to all that's going on in terms of India's role for changing the global order, what the Trump implications are, and of course, what the outlook is within the IT sector as a whole.
If you like this video, then like, share and subscribe to ET Now.